day all. Ira Epstein of Linn Associates on this historic day, and it is historic. It is Tuesday, September 24th, 2019, just after 4:30 p.m. Central Daylight Time. I have had the misfortune to go through 3 impeachment proceedings now. Nixon, Clinton, and of course, today the announcement that an inquiry into impeachment has begun formally on President Trump. Now, what do you do with these? How does the market react? Where are you on trade deals when you get a president that is now the next step? Why did the Democrats not wait to see the transcript, unredacted, full transcript of the conversation that the president had with the Ukrainian president concerning Joe Biden's son and his payment for a field within a field that he's not an expert in? I don't know. I know that it's been a smoking, waiting event, and it's here, so it's like a poker game, all in. I hate to say it. And when did it happen? Do you think the timing of this could have waited till the end of the UN security meetings that are all going on, and at least we're not embarrassed here with all the world leaders coming to town for this circus? That's my opinion. Okay, so let's go to the markets. You were down in the stock market as word came out that there was going to be an important announcement by Nancy Pelosi at 4 p.m., and it's an impeachment inquiry. Now, it could lead to an impeachment vote in the House of Representatives where all it takes is a simple majority, and that's a fait accompli. It could, at that point, then, if assuming that happens, go to the Senate, and at the Senate, you need a 2/3 vote. That is anything but a fait accompli. So we could end up in a situation where the House votes to impeach and yet the Senate doesn't, and this will hang with us very potentially until the election, unless tomorrow, when those transcripts come out, they absolutely show, without a doubt, not interpretation, that the president did nothing wrong. Then there's hell to pay on the other side, I would think. I'm not a politician, and I'm a chartist. That's all that I am, folks. I just want what's best for America, period. We all have our own ideas, but this is insanity. But, as I said, I've gone through 3 of them. So the gold market up, the silver market tried to stay up with the gold, couldn't today, the dollar down a little bit, and these were your reactions to the what-ifs. Now, an early evening trade, we're going to get a pretty good idea as to the market's first reaction to things, but not everything, because as I said, the full transcript is tomorrow. Could be the end of a presidency, could be the making of another 4-term. I don't know, nor do you, nor does anybody you know. When you're looking at a weekly area chart of closes, we're backing off. Now, last week, the close of the week was 30.1360. We're back off now to 29.70. We haven't been able to get up and through these important highs on a closing basis, nor has the market been able to get through on the daily charts this up move here. Instead, we are now retracing one more time, and the market entered with today's action an outside day down with a lower high, so the swing line turned bearish. You now have lower highs and lower lows. In order to negate that, today's high, to me, which is 30.12 is the very important number. Where did the market go to? It hung right at the 18-day average of close. It settled slightly under it at 29.7020. So you've got the bias down. The trend down is defined by the swing line, and bias comes in. I look to see where the settlement is in relation to the 18-day average. And the reason I do that, it acts as a filter on the swing line if the swing line's pointing up or down. Now, with the bias down and the swing line bearish, I have the makings of a step of a bear market. In terms of where the market might go, well, we see the 18-day average, that line in the sand is one zone. Then you have 2 other areas that come into play. You've got the 100-day average of closes and the 29.1475 level of the Bollinger Band, and that number is likely to climb tomorrow. See how it's been climbing each day? The fact that you're down today will influence it. May not climb as much as it's been, but it's likely to climb. So I wouldn't be surprised if this whole zone becomes your resistance target zone. And then to add to the bearishness, momentum turned down. So I've got a downtrend, bias down, momentum pointing down. Today's high is the key on the market. That would negate this temporarily. What about the NASDAQ? Same thing, outside day down, making a run for the first 100-day average of closes. As you can see, that number was 76, let's round it to 76, 7,700. And you got as low as 77.0175, so you're approaching that right now. This is your combination, momentum down, bias down, trend down. Dow Jones, lower highs, lower lows. You finished today under the 18-day average, momentum down. So all of these markets today responded to these words. I would have never thought a phone call with the Ukrainian president was going to be the final piece to make everybody go all in for this deal. It just comes out of nowhere. Then we get to the Russell, and if you didn't know today's events, you would say, okay, this market finally, and we were here yesterday, making a run. I'm sure that I would have said, we've got to look at a few things. Is the 18-day average going to cross the 100? First thing. Will the market be able to hit that and stay over it? And the answer is no. The market hit it. You got the bullish crossover. You have the 18 in red, higher than the green, and the green is higher than this 200-day, but you're underneath it. So that doesn't put the trend up. That keeps the market in what? For the near term, you're in a downtrend. You've got lower highs. Your bias is down since you're under the 18-day average. The near term supports the 200-day average, which in this particular stock index hasn't done a great job of offering support. It stalled the market on the way back up, but if I come back here, when you fell, you went right through it like it didn't exist. And then when you rallied back up, it acted as a bit of a resistance point, but it first slid through it. I don't know that it's going to offer you much of anything. In the VIX, don't be surprised if the VIX jumps tomorrow. It entered the bull trend, higher lows, higher highs over both the 18-day average and the 100. The next resistance number I have is the 1914 level up there. If we come to the T-bond market, T-bonds have been on a vertical price rise. What a dramatic market this has become. It doesn't give you a chance. It just moves bang or the other way. It is now not in a trend. It's got a higher high, lower low, momentum up, bias up. If it wants to make a run off a safe haven play, wherever that Bollinger Band comes in, which is probably going to be in this area here, could be that. If the markets just look at this whole event as nothing, wouldn't be surprised if it hangs at the 18-day average of closes. The 10-year note is not the same as the bond. It's got a pattern of higher lows, higher highs. It closed over the 18-day average and momentum up. This market turned bullish. You'd have to get under 129.03 and a half in order to say to yourself, okay, the market failed at that 18-day average, it's turning down. This new equation has got people that thought, well, that 1.4 area, that we're not going to go through that again on the financials. If you get impeachment inquiries going now, and let's assume tomorrow isn't enough to derail this in the transcript, do you think that area holds the market? That becomes your question. In TLT, coming straight down, and this radical rally back up. Now you've got the bias up, but you're not trending. You have a lower low, higher high, momentum up. Pretty difficult. Where would you put a stop if you buy it or sell it? It's a hard market right here. Dollar index. Did I not say to you it's just choppy? You're getting no follow through one way or the other. Today just added. Since back here, the beginning of September, we have not been able to really maintain a trend of any type. It just keeps spinning around in here. And the question is, does the dollar come under assault because of all this? I don't know, but we're going to find out. Lower highs, lower lows for the Eurocurrency. As I said yesterday, that was the first challenge of the Bollinger Band. I was looking for a bounce off of that. We're getting it, not for the reasons that I thought, though. And now the question is the resistance. Take out this 111.40 area, you negate the downtrend in the market. And you have to be careful here. Is all this inquiry, this impeachment, if it takes another life, the second step, what does it do to the financial markets? What are the impacts? In the British pound, up today. Why? Well, the UK, the Supreme Court, ruled completely. Every member of the court voted against Boris Johnson, what he had done. Tomorrow, Parliament goes back into session. I would imagine Mr. Johnson's on an airplane as we're talking, headed back there. And the fact that if they can derail Brexit, Well, the market seems to like that concept. Not that I like it or you like it or anybody. The market seems to like that at this point, postponement, and the market fighting against that 100-day average. In the Japanese yen, well, now we know why the market's been rallying. Somebody or the market thought something. You lost the embedded reading. We've seen that, okay? You were there. You lost it right here. Goal was the 18-day average. That was Monday. Have an outside day up. Until today's low's taken out, you're back into two things. Safe haven plays because of all that's going on. An uptrend with higher lows, higher highs, and is so often the case that I just mentioned on so many of the indices, it's an outside day. So today's low takes everything into play. Now where do you go? Is this market going to make a run at the upper Bollinger Band or just hanging around the 100-day average in the 18? The one thing it's done is thrown out another buy signal as I define it here. In Bitcoin, market did not pay any attention to all that was going on, went into a state of collapse. That's not a misprint, down $1,425. So this market just getting slammed as the markets are coming down there. And again, the volatility in those type of markets, it's extreme. Then we get to the Brent WTI. Do you think an event like this is bullish or bearish? The energies is what you got to ask. We still are keeping a premium because you're staying with the bias of Brent over WTI, although it has peaked out. We had that one spike up on the attack on the Saudi oil fields and its refinery, and it's given up a bit of that since then. When we take a look at the action, you're in a downtrend, or what are you? Not really. The swing line's in a downtrend, but you went down to the 100-day, just missed the 18 by 6 points, momentum pointing down. Any close under this 18-day average outweighs all that we're hearing about Iran and 3 countries now from Europe going in and blaming Iran for the attack on the Saudis. But the market's not caring. It's got another worry called what's going on in America on its mind here. You see the pullback on our WTI crude right into the support, not quite in a downtrend because you didn't close under the 18-day average. In the gasoline, 161.29 is the key number. You took that out today. So I can take off these arrows and now I can have them pointing down. So support comes in at the 100-day and the 18-day average of closes, and in nat gas, well, you're now down into what I call that seasonal type of move, where we get into the time frame of the year where, yes, on the East Coast, you can get back in the 80s. It's hard to get into the 90s. Most evenings are cool, and we don't yet use as much nat gas as we did. You have divergence here. You have a market going down here. You have a pattern where you have lower low but a higher high. Taking out 251.10 puts the market back into a downtrend with lower highs, lower lows. For support, the 100-day average, and if that lets go, the potential of wherever that lower Bollinger Band could come into play. Tomorrow's going to be a big day, obviously. We're going to get to the reactions first in Asia to all the politics going on in the U.S. We're going to then see what's going on both with the Brexit, as Parliament's called back in. Is there going to be a no confidence vote on Mr. Johnson? And then what happens with us? So I'm going to have a chance to really have a good time. So you grab your coffee in the morning, as you see. Think of you sitting down as my side, and I'm going to start a recording for you, and I'm going to cover 40 futures markets, 5 ETFs. I'm going to give you a touch of the fundamentals taking place, technical analysis, where I think you buy, sell, do nothing, stop orders, profit objectives, all there. The idea is to give you confidence in yourself or to warn you there's a time when you pick up your chips. I cover the market in this exact sequence each time. So let's assume that you're looking at all this and you want to look at the energies. You really don't care about the rest. You grab the slide bar on the end, and as you're moving it, stock indices, foreign currencies, the words will come up, and as soon as you get to energies, just let it go and it plays. You'll also have a lexicon on the side. Why? Time is important. These videos are about 20 minutes long. They're not a hop, skip, and a jump. They're not intended to be. They're intended to be in and out. They're intended to be swing trade ideas. They are certainly not about you buy here and you're going to hold for this next year on this. That is not what commodity trading, in my opinion, is about. That's why it's called trading, not commodity investing. That doesn't mean you don't catch these dramatic moves or they come and they hurt you. You got to be ready for both. You have to have trading disciplines. It's $7.95 for the first 30 days if you haven't been a subscriber. 26.5 cents a day, and believe me, I'm going to throw out ideas galore at you. An S&P tick is $12.50. A tick in gold is $10. My service is $7.95 for the 30 days, and you get a mobile ID app that comes up, and instead of a text where other people charge you for that, I use a push application. As soon as it comes out, it tells you the video's ready. You can click it. You can watch it right on your phone. You know it's out at that moment, and you can just swipe wherever you want to go. Go to our website, and under the word research, you'll see a new look to the area there. Go to the morning subscriber video, click on it, everything's explained. We've even put on, if you want, where you can do the $7.95, or you can buy a one-year subscription for $156, or you can just try it any way that you'd want. It won't be free. You can click up here to get that as well. Remember, you're not going to see these videos on a YouTube. On other people's websites, it doesn't exist at this point. I may put them elsewhere, but it'll always be a subscription. I'm Ira Epstein. You have a good day, and I'll talk to you later.